4 million transactions, 24 hours, one network. While Bitcoin struggles with 7 transactions per second and Ethereum chokes on gas fees, Kaspa just quietly processed double their combined daily volume without breaking a sweat. Zero downtime, zero congestion. Pure proof of work at 100 transactions per second. But there's something strange happening in the data that nobody's talking about. One mysterious address just sent over 1 million microtransactions while holding less than $1,000 worth of KS tokens. Is this a stress test? A bot attack? Or are we witnessing the final preparations for Kaspa's smart contract launch? The price action tells a completely different story than the network performance, and the disconnect is about to create the biggest opportunity in crypto right now. Kaspa isn't just another blockchain throwing around buzzwords. This is block-DAG technology proving itself at enterprise scale while everyone else is still drawing white papers. The numbers don't lie. 4 million transactions processed without a single hiccup, fee spike, or network congestion. Compare that to Bitcoin's theoretical maximum of 604,800 transactions per day, or Ethereum's roughly 1.2 million. Kaspa just processed more than both combined, and it's running on pure proof-of-work consensus. No staking validators, no centralized checkpoints, no compromise on decentralization. The block-DAG architecture allows parallel block production instead of Bitcoin's linear chain. Think of it like this. While Bitcoin builds one block at a time like stacking Lego bricks, Kaspa weaves multiple blocks together like a spider web. Every connection makes the network stronger, faster, and more secure. But, performance metrics are just the appetizer. The main course is what this mysterious million transaction address is really doing. Deep in Kaspa's transaction data, something unprecedented is happening. One single wallet address has been firing off microtransactions like a machine gun. Over 1 million individual transactions while holding roughly 929 KS tokens. At current prices, that's less than $80 controlling network activity that would cost thousands on Ethereum. This isn't normal user behavior. Regular crypto users don't send 1 million transactions. DeFi protocols don't operate this way. Gaming applications, NFT platforms, even high-frequency trading bots don't generate this pattern. The transaction volume suggests 3 possibilities, and each one changes everything for KS holders. Possibility 1, network stress testing. Kaspa's development team has been tight-lipped about smart contract deployment timelines, but this could be final load testing before vProgs launch. If developers are pushing the network to its absolute limits, it means smart contracts are closer than anyone realizes. Possibility 2, external validation. Major institutions, exchanges, or blockchain analytics firms might be independently verifying Kaspa's throughput claims. When Solana first hit mainstream adoption, similar testing patterns appeared weeks before major exchange listings and institutional partnerships. Possibility 3, automated arbitrage preparation. Someone might be positioning sophisticated trading infrastructure on Kaspa, expecting massive liquidity increases from upcoming developments. The timing isn't coincidental. These million transactions coincide with increased developer activity, testnet updates, and strategic partnerships that haven't been publicly announced yet. Meanwhile, the price action tells a completely different story that's creating a massive disconnect between network fundamentals and market valuation. While Kaspa's network is setting performance records, KS price remains trapped in cryptocurrency purgatory, a tight range between 8 and 9 cents that's lasted for weeks. The technical setup screams accumulation phase. KS has been consolidating since late July, building a solid support foundation at 7.2 cents. Every dip to this level gets bought immediately, creating a textbook example of institutional accumulation. The resistance zone sits at 9.9 cents, and here's where it gets interesting. 5 separate attempts to break this level have failed since August, but each failure shows decreasing selling pressure. Volume is drying up at resistance, not increasing. That's bullish divergence. Current price action shows KS climbing from the 7.2 cent support to 8.9 cents before pulling back to 8.6 cents today. This isn't random price movement, it's controlled, methodical, and designed to shake out weak hands before the next leg up. The relative strength index sits at 36 on the 4-hour time frame, below the neutral 50 line but showing hidden bullish divergence. RSI is making higher lows while price makes equal lows. That's textbook reversal signal preparation. Open interest remains steady at $476 million, but the composition is shifting. Net long positions total 193 million while net shorts hold 224 million. This slight short bias is exactly what you want to see before a squeeze higher. Smart money isn't adding massive positions yet because they're waiting for confirmation. But when that 9.9-cent resistance finally breaks, the short squeeze potential is enormous. The broader cryptocurrency market is setting up for altcoin season, and Kaspa is positioned perfectly to capitalize. While Bitcoin dominance remains elevated, altcoins with real utility and proven technology are starting to outperform. Kaspa's unique value proposition becomes clear when you examine transaction costs. Those million microtransactions? They cost virtually nothing. Try sending 1 million transactions on Ethereum and watch your wallet evaporate faster than ice cream in Phoenix. So the DeFi total value locked is approaching all-time highs again, but, this cycle really looks different. Instead of just speculative yield farming on unproven protocols, institutions are now focusing on infrastructure plays. Kaspa represents, kind of the holy grail here. You get Bitcoin's security model, Ethereum's programmability potential, and it's running at Solana speeds but without those centralization risks. Layer 1 blockchain valuations, they're still pretty suppressed compared to those 2021 peaks. But here's the thing, networks that are showing real adoption are starting to decouple. Kaspa's transaction volume has surged, and while doing that, it's managed to maintain stable fees, proving, honestly, that the technology really works under pressure. The smart contract implementation through vProgs could actually trigger the same kind of explosion Ethereum saw back in 2020, but this time, with better technology and a more mature market infrastructure. So, based on the technical analysis, network fundamentals, and market positioning, KS price has, 3 potential scenarios over the next 30 days. In the bearish scenario, if support at 7.2 cents fails, the next major level sits at 6 cents. This would require either a broader crypto market collapse or some major negative news specific to Kaspa. The probability here is about 20%. Now, in the base case scenario, KS continues range-bound trading between 8 and 9.9 cents until there's a smart contract announcement or a major partnership. Accumulation continues, setting up for an explosive move later in Q4. Probability for this is 50%. And then, there's the bullish scenario, million transaction activity confirms smart contract preparation. KS breaks 9.9 cent resistance with volume, targeting 15 cents within 30 days. Major exchange listings and institutional adoption follow. Probability for this one is 30%. The risk-reward setup here, honestly, heavily favors the bullish case. If KS breaks resistance with conviction, the measured move targets 13 to 16 cents based on the consolidation range. That's 50 to 85% upside from current levels. Short-term traders should definitely watch for a 4-hour close above 9 cents to confirm a momentum shift. Position traders can use the 7.2 to 8.5 cent range for accumulation, with stops below 6.8 cents. From an institutional investment perspective, Kaspa represents asymmetric risk-reward in the blockchain infrastructure space. The technology really delivers on scalability promises that Ethereum 2.0 is still trying to achieve, while maintaining Bitcoin's proven consensus mechanism. The million transaction stress test combined with increased developer activity suggests major announcements within the next 60 days. So, institutional crypto portfolios are already positioning for infrastructure plays and, Kaspa's combination of proven technology and undervalued market cap makes it an obvious candidate. Traditional finance is finally starting to understand that blockchain performance actually matters more than, marketing budgets. Kaspa's ability to process 4 million transactions daily without network congestion solves real business problems that enterprises face with current blockchain limitations. The upcoming smart contract functionality through vProgs could create the same developer ecosystem explosion that drove Ethereum from $80 to $4,800. But this time, the underlying technology can actually handle the demand. Kaspa just proved it can handle more transaction volume than Bitcoin and Ethereum combined, while someone is secretly stress-testing the network with 1 million microtransactions. The timing suggests smart contracts are closer than most people realize. The price remains suppressed in an obvious accumulation range, creating the perfect setup for explosive upside when the catalyst finally arrives. Whether that's a smart contract announcement, major exchange listing, or institutional partnership doesn't matter. The technical setup supports significant gains from current levels. This is how generational wealth gets built in crypto. Not chasing green candles after they've already moved, but identifying infrastructure plays with proven technology before the market realizes their potential. Drop a comment with your KS price prediction for October, smash that like button if this analysis helped your trading strategy, and subscribe for daily crypto insights that actually matter. The next few weeks could change everything for Kaspa holders. Don't say you weren't warned. Disclaimer. This content is for educational and entertainment purposes only and should not be considered financial advice. Cryptocurrency investments carry significant risk, including total loss of capital. Always conduct your own research and consult with qualified financial advisors before making investment decisions. The creator of this content may hold positions in discussed cryptocurrencies. Past performance does not guarantee future results, and all trading involves substantial risk of loss.